Okay, so good morning, Jonathan, and nice to see you here. As usually, please give me a yes when I change something. I tried this morning to put everything on the screen, but of course I will need to put the the momentum gauging charts later. So whenever I change, just let me know if it's not changing or if it's changing at least. So now, let's go to the Euro USD. We will look at the monthly chart first. So here we are. So we will look at this because we had the monthly close yesterday and we want to know where we are, okay, how we closed yesterday, because it's always important. Every day we look at the daily chart, and every month's close we look at the monthly chart, like every week. We look at the weekly chart, nothing very scientific there. So if we look where we are, we closed, you see it here. We have been closing, and that's what I've been calling, asking, or wanted to see. We have been closing right above the 38.2. So for all the ones that are following daily the update, you remember I spoke about this. I said the close above this one would be welcome, because then we could look for the next one, which is the 2360 and the 1-to-1 together with a huge 61.8, which is our first target on the upside at 103.75. So nothing has changed with yesterday close. I was expecting, to be honest, a little bit more push on the Euro USD, but we had something nice. We have made our money this month with it, so it's not a big problem. So this one is what we see here. Nice monthly close above the 38.2, suggesting that whenever we go lower, which is the case actually now on this new month starting, we should see, I repeat, because we have this geopolitical environment which is not favorable, but we should see a close back above this one and probably a continuation. You see, we have a big week on the downside, so that would be great if we could close back in September above this one. And as you know, I am still hoping, it's a little bit tricky now, but I am still hoping we see a close above this one on the month's end, which is the quarter end, and that way we would post a phase breakout under this 61.8, which is the huge multi-year ABC down. So that would be great if we could do that. If we don't, we still have our next level here, which is the one I speak about every day, which is the 76.40, 78.6 fib. So we have them on the daily chart. You can see it there, and that's where we are waiting. If something strong would happen, this is the area where we wait to get very big longs again on the upside. So that's what I'm looking for. Ideally, this month, a close above the 38.2, and if we could, a close above the 61.8, that would post a phase breakout under this big 61.8 fib here, or that big ABC down, which is a huge one. You see it again here, starting in 2014. Then we have the B in 2015 and the C in this area in 2018. And since then, we have been using this one very nicely. So we would like to see a close above that one. That would be very great. Post a phase breakout on a quarterly basis under this 61.8. So now let's come back to the shorter time frame, because we do not trade on a quarterly chart. So I will just go back to the, let's say, to the 1 hour chart, and then look at what we have there. So we are now inside this 1 hour chart. It's a little bit crowded when we look at it like this. Let me open it better. Okay. So Jesus, what I did. Okay, let me get it again, because when I have that on this, what is that? I need to put it big again here. Okay. So what is this one? Okay, so that's where we are. Now we do like this, it will be easier. So we have this 1 hour chart. You see we push to the daily 2021 moving average, exponential moving average to the PIP. We pull back from it. And what I draw this morning here is the small ABC down here that we have. So we can look at it better on a 15-minute chart. I spoke about it when I said I went long in this area, because this is a 61.8 of that small inside ABC down. We can use the ABC everywhere. And for example, here to have the force target on the 61.8 together with the 4-hour 2021. And the 1-to-1 extension would be here together with this big volume block of August. So actually, we use August volume block, of course, because the September are not existing yet. So what can we expect today? Well, we can expect the upside as usually. So I buy with a setup. I bought it with a small setup here. We had this quarterly block here. We had this quarterly support here. So that's why I took it right there, if I remember well. It was there. Yes, exactly. Then we came back. We had this small Chinese Taiwan thing about the drone that was destroyed by the Chinese or by the Taiwanese army, blah, blah, blah. So as I say, geopolitical conditions are very unfavorable to keep trade for a long time. The safest thing to do now is to trade intraday, bank most of them, run them if we have a nice protection on them with a big green wall that protects us, like 50 pips, 60 pips or more. But even when we do that, you will see that most of the time you lose what you had and then you restart again lower. So the best is to bank as much as you can every day and start again the next day, as I do every day with this strategy. We can do it very easily. So for today, we have those levels here. We will look, of course, at Dixie. The level has not changed, of course, in the last days, because they are here since years and they won't move like this. We have here the daily 50%. We have here the weekly 38.2 weekly ABC down. So you have the information of most of them here. Preview stop. Everything is said. We have this big Dixie Euro USD divergence. So this divergence is telling us one of them is lying, and one that happens when we have a big divergence on this, due to the fact that Dixie is not the one that controls, but Euro USD is controlling more Dixies, and Dixie is controlling Euro USD, of course. Then we know who is lying. It's not the Euro USD, it's the other one. So, and that's what I have seen a lot of times. So today, if we go down, we are 20 minutes before London Open. If we would go down on the London Open, we have those levels, 1-to-1 extension here, some fib there. We have the other chart we are looking at with some here volume and price action support and resistances, daily, quarterly, monthlies. So this is the other chart. And the last one is this one, which is a little bit lighter, only with some other fibs here. So we are looking at the support resistances we have, and we will get long when we can if we have a pullback, and that would be great. So now we will go back to the Dixie chart, and we will do exactly the same. First, we look at the monthly close, because the monthly close is telling us a story, and we need to know the story. So as I say, the Dixie has been positively divergent with the Euro USD. So we must take that in consideration, and that's telling us, please close this door. That's telling us we have to keep that in mind. So this is yesterday. Yesterday we closed, and that's very interesting. We closed under the 61.8, which is nice, and that's what I wanted to see. So on the Euro USD, we closed above the 38.2. On the DXY, we closed under the 61.8, and that's suggesting the next month we would be back under it. Okay, so if we look intraday, I will need to make a small pause. Give me 1 second, please. I won't be very long. Qu'est-ce qu'il y a? Okay, sorry for that. I had to go because I had some trouble outside. So, and I cannot stop the live. So I was saying we close above under the 61.8, like the Euro USD close above the 38.2. That's a good sign. And I think we can see some red candle for the month of September on DXY. Now we look at it a little bit more inside, like we usually do. So what we see this is 76.40 is working, is doing his job now, like it has been doing. So this is a big, just to refresh mind about this one. So it's a last swing retracement. So it means it's not the all time, but I took on this one the last big swing, as you can see here. It's already a big one. It's this orange one, so which is measuring 2008 to 2001. And the red one, of course, is the all-time retracement. Okay, so we have that. We have that that fib here that has been holding. So it's a long-term fib. That's why sometimes we can go a little bit through them, then we come back. Those fibs should not be looked on a 15-minute or 1-hour chart. They should be looked to see if they work on a daily at least or something like that. And I'm pretty sure we never close above it on a daily basis. So, or weekly, of course, never. So that's where we are. We are now pulling back from this 76.40, like and at the same time, sorry, we have Euro USD that is bouncing from his 4-hour 2021 and inside 61.8 ABC, as I just said. So we still need to break on both of them anyway. We need to break the consolidation. So we have this consolidation here, accumulation, consolidation, blah, blah, blah. I still expect, even if I'm long, which means long Euro USD, which means I am short USD now, always, unless I'm scalping. But I still think we could see this level very probably, I don't know, today, perhaps tomorrow, one of those today, that would be very great, because then we would start next week with a clean technical a clean technical image, which means we would have finally tagged this one-to-one extension. And we know the next one on the downside would be the 88.6 here. So that's what we are looking at. We see the 88.6 has been working very nicely in the past. On the upside, it will do exactly the same on the downside. So when price will come back in this area, of course, it will bounce from it. And then it could still come back up, touch again this area and go down. But I think if that happens now, usually what we see when we have a summer push like we had, the top or the bottom is in place more or less between the end of the last week of August to the first week of September. That's what we see a lot. You can look at that on your charts. In the past, you will see it happens a lot. So I think I didn't record this thing. No, it's recording. Anyway, that's good. So that's what we can see. But once we would be there and once we would have gone over the 10th or next week, I think Friday is the 9th of September. So I think if the ideal thing would be we touch that this week or next week. And then from there we go down. And if that would happen, we could have a top in place for at least the next quarter. Okay, so it doesn't mean we cannot spike or touch it again or whatever, but that would be a top area in place for a long time, a longer time, and probably even more than a quarter. It could be a year or more than that. So we will see what happens, but that's what I'm looking for. This one, I would like to see it touched, taken by the market, and then we go down. It happens, we never take them, we stop a few pips away from there. That happened too. So that's why with the indicator, we knew we could get the short here. And as we did in the past, when we had the retest of this 88.6 fib, we went short, even if we knew we would go a little bit higher. But at this point of time, the risk reward is way too nicer on the long side than on the short side of the Euro USD, of course, which means is way better on the short side of the USD than on the long side of the USD. Now let's look to finish this monthly look. Let's look at the chart we have here. So we will look first at the volume. No, we will look first at the prices charts, and we will start here with the monthly. So where are we from the monthly? I will take off this line here, which is bothering me. I don't want to see it there. Okay. So on the monthly, this is a monthly chart. We have a very nice long setup here. We could, if we would go a little bit lower and stay lower, which is not what I look for, as I just explained, but we could have a divergence on the monthly signal, which do not happen so often. I mean, that didn't happen. Even if I look till there, then it's bullshit because it's nothing. The Euro USD was existing for any reason there, but it's not active. I mean, for me, the important part of the Euro USD is starting here, 97, 99, and then further. So this one is very interesting. We have a very strong signal, and generally those signals generate from 1,000 to 5,000 pips on the other side till we get the opposite signal, and then we go down. So that looks simple, but it's not the daily. This is the monthly. On the weekly, it's unchanged. We still have this signal. We are a little bit up on this signal. We didn't get really a divergence here, dynamic divergence. If we look at this one, if we look at this one on its own, you have, it's not diverging with the price. So we cannot consider it as a dynamic divergence. Concerning the daily, so the daily, now we will keep our usual chart with daily 4 hour, 1 hour, 15 minutes. So the daily has had a very nice diverging dynamic divergence here, together with the DXY Euro USD divergence too. So we had a signal on the 4 hour, nothing. So you see now we have a signal on the 1 hour, meaning when we will have now the 1 hour together, let me verify, yes, the 1 hour together with the 15 minutes. So we could see a little bit downside, perhaps on the London Open this morning. We will see that now. I will perhaps try to keep live on the London Open if you wish. So we could go lower, and then we could have a signal on a 5 minute, on a 15 minute, or at least on a 5 minute. So this is 5 minutes now. So when that will happen, it means we have a fresh signal on the 1 hour, and we still have the tailwind of this divergence, DXY divergence, Euro USD dynamic divergence of price 6, and some tailwind behind us. So it's good because we have some medium time frame with us, like the 1 hour, and I like that. Okay, so we go back here on the 15 minute. The 15 minute, we had a signal at 6:37 just before we took the trade long this morning. We are now struggling in this area where we started this morning, and we will look at that just after we finish with the volume. So now we go back to this volume analysis. So on the monthly, it's very simple. We have a very, very, very low reading, as we know. So this is, I can get it like this. So this is a very long time frame reading. Monthly, there was no volume analysis before that time. So on the monthly, you see we are really at very low. It can stay there on the 7 period. It can stay there for a long time. But if we look at the same thing on the 14 period, it doesn't stay there. And I think, if I remember well, we'll see that now, but I think it never went so low, ever. Only in 2004, but since then, never. So that's extreme reading. And inside this extreme reading on the 14 period, we have the 7 period that is giving us, of course, a flat reading because it's at 0. So it cannot go below on this volume indicator. And we stay there. So that's converging, confluencing, giving us more fees if we need phase in what if we would need more in what we look for, which is an upside move for 1,000 plus pips on the Euro USD. Okay, so now now we look at the same on the go on, sorry, with this one, yes, on the 7 period. The weekly is on the upside, so that suggests at a certain time we could see a retracement when we will get the weekly and the daily and the 4 hours on the upside. We will get a retracement, but still have some nice room on the upside here, still have some nice room on the upside on the daily. The 4 hour, 1 hour, 15 minutes, and 1 hour, they do what they can. We remember we have a price 6 signal on the 1 hour, which means whenever this one will come low, that one will come low, and or this one will come low, we will have a nice reaction. So let's go back to shorter time frame because we are now looking at, I was looking on the weekly, which means nothing. So here we have something readable. We are on a 15-minute chart looking at those time frames. So you see we had just now, before the London Open, we touched it here. I just added while I was speaking to you at 100, that 10012, some longs. So we should go up, and whenever we have a pullback, we will buy this pullback, whatever, not whatever it is, of course, but whatever happens, that will not change till we finish and we unfold this long monthly thing. So it's important to understand that because many are asking why I keep on. I keep on because I have a long-term reading. So before this, and even the 15 minutes here, I mean, even the 14 period here, the long here will stop when that thing will be in above the 50% or higher, which means usually they repeat things like everything on the market. So when we would get in that area first, and then this area, we could think, and we would have, of course, a price 6 signal at the same time, but we will start to look for a short. That will be in many times, because you see this move, for example, from this one was 2018 to 2022. It's 4 years. It's a 4-year move. Same thing if we look here on this one, we look at it on a monthly base, and you will see the signal do not happen. This one is much more precise, because we know that we start to look lower, to look to short when we have red signals. That's very simple here. So we have a lot of time before we get the red signal on this side. It doesn't mean we change the trend, because then we will read our ABCs and everything we have, but it means we wait for that to start to be short. So if we look here before the end of this signal, 2019 to 2021, it was 3 years again. And here, same thing, 16 to 17, it was 18, it was 2 years. And here the same, 15 to this area, let's say 17, it was another 2 years. So we are looking at something for probably 1.5 years or 2 year upside move. Okay, that's what I want to leave clear. Until this thing is not red, I keep on being long. That's very simple. Inside all what I just said and looking at all what we just mentioned. So I hope that is clear. Now we look on the inside a tool. It's exactly the same. You have all the indicators here that I'm using. You have the price 6. We had a long signal, and you see we had here a volume, a little bit of short-term volume here. We bounce again from this 4 hours 2021 email. Let me bank a little bit here, because I have to bank something there. Okay. So that's what we have. We have the London Open in 2 minutes. So it will be interesting to see how we get inside the London Open. So, concerning the London Open, it's so many are asking me about this. The London Open is happening at 7 GMT. So from 7 to 7:05, more or less, we can see fake moves, which means it's not the move we will get. But when the move go on after 7:05 to 7:10, 7:15, then we need to wait 7:25 to 7:30, which is the beginning of the time channel. So I will put it here. You see it here. This area, 7:05, 7 to 7:05 can be fake. As soon as we go in here, we will wait to see 25 to 30. And then the next big time will be at 8, and then at 8:30 when the time channel ending. Each of those half hour can see a turn or can see something happening. The general thing about the time channel is it starts at 7:30 and ends at 8:30 GMT. So it lasts about 1 hour. So if we have a move starting on the time channel, it will start at least 1 hour. And in many occasions, you will see this move will keep on till 10 GMT or something like that, or even later. And most of the time till the New York market opens, which is generally when we have people, actually in this time, we have people buying again the USD, because of course they do not use the same tool and they have a different view. If you use only EMA or moving average, of course you are still long USD always, and you will keep on being long USD till you see a crossover on the moving averages, which is always a late signal, because they are giving the information always with some delay compared to what we are using here. So I'm not saying it's better or not, and I'm not saying it's a bad way to trade. It's a very good way to trade if you want to trade with only moving averages, and you can do very good things. But even on moving averages, you need to know if price is ready to bounce or not. I mean, when the price comes on this 4-hour moving average, you see it here, it's ready potentially for a bounce, even if we don't have a complete signal there. So we see the open, you see we had a start a little bit down. We will see what happened in the next 2 or 3 minutes. So it's now 1 minute after the open, we had this little push down. So it's interesting to look at that. If this move down stays on, so I will go back to the regular chart now. The Euro USD chart, this is the Dixie. I will take it off, or we can keep both of them if we want here and reduce them on the screen. So if we want, we can look at that for a few minutes more. Then I will focus on my trading. So that's where we are now. You see, we went back to the 50% of that inside fib here. We still have sometimes before 705. The Dixie is staying a little bit, is still staying under it, and it's not looking like it wants to challenge this level now. If it would do it, we would be happy, because then we would get this quarterly order block and previous highs. We would get those levels here, the 88.6 that has been holding very nice on the previous highs now, on the last one. And then we would get what I just spoke about. No needs to speak again about it. We would get this one. What I like a lot now is if we would get that area, at the same time we have the confluence with the trend line, and that's really nice. So we will see what happens. If it's not now, when it would happen, as I said, probably with the ISM today, because we have the ISM. Let me verify if I'm not saying a stupid thing, but I think it's today. I had it in my memory, but sometimes it's failing. Yes, it's today. So at 2 p.m. we have the ISM, and tomorrow, of course, we have the NFP. So concerning tomorrow, what could happen tomorrow? Of course, two things, or we are starting to show more more employment weakening as it will happen. So it can start to happen and to be notified by the NFP tomorrow. If not, then we can get a good one, and we would push probably to this area here. Or we could push it inside the ISM and then get a confirmation of this NFP that the employment is going less good. It's always harder to stay on the top of the curve than to be going up. So now United States have a very good economy. They have a very strong employment, around 100%. So of course, it's more probable that they will go down when you're on top of the mountain. But on top of that, all what I said about the consumer confidence, about all what is happening, is confirming that the economy will slow down. And so when the economy slows down, the employment is going less good. That's mechanical. Less job in the factory, less work for the people. Very simple. Okay, so that's where we are now. Look, it's about 7:05. We have nothing happening yet, so we have not broken lower, so we could see a continuation on the upside. I leave you with all that. It's posted inside the Twitter feed. I hope you enjoyed this time, and I will post the recording as soon as it's ready. Have a nice day. We keep in touch, and I will do an intraday update if necessary.